Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. One of my favorite companies that I have in my portfolio is UPS. UPS is in my portfolio. United Parcel Services, one of the companies that I've had in the portfolio for quite some time. You've seen me buy it in the last, I think I haven't bought anything for the last couple of months, but before then I was buying weekly almost. Okay, and what I would like to do today is, just because it has come down quite a bit, I want to look at the financials again and then see if it's actually a buy and if I can continue buying it, or if I should not, or just hold on to what I have. And I'll let you know what I decide at the end of the video. But first, before we do that, like the videos please, because it makes a huge difference to the channel. And also, if you can join us on the Discord, that would be absolutely amazing, by of course first joining on Patreon account, where you get access to all the buys and sales that I make, all the dividends, ETFs, and all of that stuff that I share with you guys in the stock watch list, as well as the Sharia compliant investing ebook. And you can of course then join the Discord to basically where you have a like-minded brothers and sisters that are sharing absolutely amazing things every single day. So that will be absolutely wonderful if you could do that. Now let's talk about the company. So UPS is the company that we're talking about today. Is down about 10%, just over 10% for the month. For 1 year, almost the same, and for the last 6 months is down about 6%, and for the 1 month is actually come back for 1 month for almost now up about 11% for just this month, because of course the markets have actually come back up in the last couple of days, but it was down way more than that not long ago. So in a way it's coming back. So what I want to do today is just to look at the financials and see where this company is heading. But I thought that I'll share this with you guys because I found it really interesting. One of the things that I didn't know about this company until very recent is the fact that they actually acquired 2 new businesses in their portfolio. And one of those companies is actually gives them the chance to be, in the healthcare logistics side of things. So they bought a company called, I think it was, MNX Global Logistics, and this company delivers, okay, if you go to their website you can learn more about it, but they deliver all the basically healthcare equipment, healthcare stuff that basically people need to be delivered and so on. And the other thing they're doing also is they have it says here, open 7 dedicated healthcare facilities in 2023, on track to generate $10 billion in healthcare revenue this year. And that's absolutely amazing. That's the kind of company I want to invest in. Companies that are basically acquiring other businesses, because there's 2 ways of increasing revenue. One is of course organically basically selling their own products, and the other one is acquiring other businesses to increase that basically revenue. And that's what the company is doing. They're doing both of them. So what I want to do is just go over the financials and tell you exactly what I'm doing with the business towards the end. Right, so as you know, the UPS, I'm sure you've seen their trucks everywhere. The fact that they deliver everything from anything basically in the United States and all around the world. Current share price is $157 per share. EPS almost to $10 US dollars. A market cap of $128 billion. So they're not a small company at all. They have a wide economic moat, and they have a beta that's just slightly above 1. Current PE is about 15, let's call it maybe 16. The forward PE is about 17, and the 5-year average is about 16, 17. So there's not really a far off where it's basically been in the last 5 years, and the price to free cash flow is about 23. The sector, the industrial sector right now is about it has a PE of 22, and the S&P 500 trailing 12 months is about 25 right now. In terms of dividend, this is where this company shines, in free cash flows and so on. So dividend right now is over 4%, which is absolutely huge. I think I was buying it when it was about 3%. Remember, as the price goes down, the dividend yield goes up, and as the price goes up, the dividend yield comes back down. Okay, so just bear that in mind. The payout ratio right now is 64, little bit high, so hopefully they can use some of that cash to the net income, hopefully increase that net income so that this can come down. Latest increase 6.6, almost 7%, and the 5-year growth rate of 13%, so double digits. There's not that many companies that have been around for this long and that have actually done this, and the dividend growth streak right now is about 13 years. So they have not been paying it for a long time, but 13 years to be honest with, and 13 years of increasing that dividend is absolutely crazy. The annual payout you get right now is $6.48. The dividend safety is 69%, which is absolutely solid. Free cash flow of $5.5 billion and free cash flow yield of 4%, 4.2%. Now, we're normally looking for 3% and free cash flow margin of 6%. Normally we're looking about 5%. So in terms of the dividend side of it and free cash flow, this company is doing an absolutely amazing job. Now let's have a look at it in terms of profitability and how effective the management is. So profit margin, we're looking about almost 9-10%. Profit and operating margins about 11%. Return on equity of 47%. Total return in the last 10 years, you would have received about 7%, almost 7% every single year. And return on invested capital, we're looking about 21%. In terms of revenue, compounded annual growth rate in the last 5 years, you would have made about 8%. So the company made about 8%, and the current ratio is way above 1, which gives us in the confidence that the company will be able to pay off any liabilities they have in the next 12 months. And the growth estimate for the next year is basically 10%. So this year, basically the next year in 2024, they're expecting the earnings to grow about 10, and then after that they're basically expecting some sort of a decline about 5%. And again, remember, all of these things are just estimates. Anything can happen. Basically the markets can easily change. If, for example, the recession does not happen, because I think this is probably saying if recession happens, this is what's going to happen. The reason is because if a recession happens, not many people will be ordering stuff from Amazon, right? And this company will not have as much volume to deliver as much as they have right now. So that's what basically we're saying here. But what if that changes? What if there's no recession or whatever? Yeah, and that can easily change. So it's speculation or whatever. But again, for me as a long-term investor, I'm not really worried about this. I will use this as an opportunity to buy a high-quality business that I know is going to be around for a long time. I could be wrong, but that's my basically judgment. Okay. So moving on to the next part. If you haven't liked the video already, please like the video and subscribe to the channel. Current price, we already said, is $156, and fair value right now is $164 from Morningstar. So they're saying it's actually just fairly valued at the moment. According to Simply Wall Street, they're actually saying it's about 20% discounted. So they think the price should be $195. And honestly, that's where I think the company should be, in the 200s. Because if you look back, right, if you look in for the 1 year, it was around $195 in April of this year. So it belongs around that. It's 195. So it's not far off from where they're saying it should be. Target right now in the next 12 months for tip rank is saying 165. And then it's basically tip rank is also saying it's about 8% upside from where it is right now. Is a moderate buy from them. Seeking Alpha is more or less the same, 166. These guys use the same sort of analyst if you think about it, and 6% upside, and it's a buy from Seeking Alpha. Now in terms of Sharia compliance side of it, business side of things, no issues. That's 100%, 19% in terms of interest-bearing securities, and then interest-bearing debt and security is about 5%. As you can see, they have been buying back their own shares, so they have not diluted the shares for quite some time, which is nice. So the company is buying back their own shares. They increasing that dividend, and the revenue is heading the right direction. So a couple of more things, and then I'll wrap up the video. If you go to Seeking Alpha, you can see one of the reasons why the stock has come down a little bit this year is the expectation that the revenue is going to decline from $103 billion to $100.3 to $91 billion, but then it goes from the 91 to 95 the following year. So that in 2023, this is what we're expecting. So the end of this year, when they report, we're expecting the earnings, so of course the revenue to decline, and 2024 to bounce it again, and that's probably why that there was that 10%. Again, I'm not worried about that, okay? So because I'm not investing in this kind of businesses for just 1 year, 2 years. And of course, EPS is also more or less the same, but the following year is bouncing back again from where it was. So that's the reason why I do like this type of businesses. In terms of dividends, are absolutely fine. In terms of safety, in terms of growth side of it, in terms of yield, if the consistency of paying that dividend. And for me, I can just sit back and buy high quality business and collect that cash while I wait. And if the company goes down even further, I'm going to add to it. So just to be transparent and to show you how many shares I own right now 30 shares of this company. It was actually, when it was up quite a bit, it was one of my biggest holdings. still is in 10th place right now, 4.4% of my entire portfolio, or £3,750 I invested. I'm down about £500. There was not long ago, it was almost basically £1,000. Right now it's about 13% down. So what am I doing with the company right now? I do have quite a bit of industrials that I own. So there's some of my biggest holdings. If you look at it, Union Pacific, Union Pacific and United Parcel Services, as well as the companies, for example, have taken over almost my entire portfolio. So right now, my biggest sector is actually industrials, including automatic data processing and so on. So what I'm trying to do, as well as 3M, by the way, what I'm trying to do is kind of reduce that. I'm not selling it, but I'm gonna basically put more emphasis on the companies like the healthcare companies like the consumer staples, consumer discretionary, and then possibly after that retail as well as the finance. So right now I'm not adding to it, but if it comes back down again a little bit more, then I might start again nibbling here and there just to add a couple of more shares, inshallah. There you have it. That's what I wanted to share with you guys today. I hope you enjoying the content. If you are, it takes a lot of time and effort to put these videos together. I would really appreciate it if you can join us in the Patreon, okay, just to support the channel, as well as, of course, give it the videos a like, subscribe to the channel. Let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.